Well, the Bank of Canada did it again today on January 29th, 2025. The Bank of Canada once again brought us an interest rate drop, and today was a 0.25% drop. So that brings the bank's overnight rate down to 3% from a high of 5% last year. What that means for you, if you have a variable rate mortgage, you're going to see that the monthly payment on that variable rate is going to drop about $14 for every $100,000 that you owe on a mortgage. So if you have like a typical $400,000 mortgage, you're going to see an interest or a mortgage payment drop of nearly $60 per month. And this is made possible because inflation has been stable here in Canada. It was, of course, high during those COVID years, and that's why we saw such dramatic increase to the Bank of Canada's rate. But as inflation dropped down to 2% in the middle of last year, the Bank of Canada was well positioned, and they saw that coming, so they started their drops in June. But the Bank of Canada was well positioned to give us several oversized rate drops, which is what we saw last year. And we're probably nearing the end of rate drops. The forecasts have been for 3 separate 0.25% rate drops throughout this year. But the future is still uncertain, and we don't know exactly what we're going to see. And it's because inflation in Canada is highly impacted by what goes on outside of Canada. But assuming everything remains kind of on course for where we are right now, the Bank of Canada is expecting that the consumer price index, that's the headline inflation number that we see, that it's going to be somewhere around that 2% mark over the coming 2 years. So that's good. We do hope to see that. But there are, like I said, external factors that could change that. A lot of it's unknown, so it might sound like fear mongering. Not really sure what we're going to see, but we are seeing that inflation in the United States is higher than what we've been seeing here in Canada. In fact, their inflation has been coming up since September of last year. It was kind of around 2.4% or so in September, and it's now up close to 3% with expectations of US inflation being above 3%. With the new president in the United States, we are likely going to see more inflationary pressure going on there, like the president or don't like the president. The policies do speak for themselves. If the US does enact broad based tariffs like he says he will, that is going to effectively be a tax on anything imported in the United States, which would cause prices overall to increase. And that is the definition of inflation. If Canada reacts to tariffs against us, then that would actually cause inflation in Canada and might lead to the need for the Bank of Canada to raise rates before the end of the year. Hopefully, any sort of trade war or tariff war will be short lived, or even in a best case scenario, hopefully it won't happen. In the United States, if they're deporting a lot of low wage workers that are in agriculture services, hotel services, restaurants, etc., there's already very low inflation there. It's going to be very hard for them to fill those jobs. So that will add a level of scarcity, at least in the short term, which would likely cause some inflation. And of course, deficit spending by their government, our government, that also causes spending or causes inflation. And then, of course, Trump's promise to not tax tips overtime or social security benefits. Well, that's great on an individual level. It does leave more money in the economy. More money means more spending, and that also pushes toward inflation. So since September of last year, and I know, of this time frame, only part of that happened after the election in November, but since late September, interest rates for mortgages in the United States had dipped to about 6%, and now they're up almost at 7%. So we're already seeing an increase in interest rates in the United States because of the expectation of inflation being less in control than it was. The US Fed has an announcement today as well. The expectation is that there will be no change to its interest rate. It's 1.5% higher than Canada's at 4.5. And honestly, the expectations of a US Fed rate drop before the end of the year are quickly vanishing. Obviously, anything can change, We don't know what's going to happen in the future, but we are hoping and hopeful that any trade stuff, any tariff things are short-lived or minimal in their impact. But the Bank of Canada is going to, of course, keep watching that. And the next announcement that we're going to see from the Bank of Canada will be after the start of any promised tariffs, likely that could begin as early as February 1st here. And so we will hear from the Bank of Canada again on March 12th and see what their projections are then based on what's happened in the meantime. If you like this kind of content, please click like, please click subscribe. If you're looking for information, please reach out to me and my team. You can comment on the video here or visit our website by clicking on the link in the description. Thanks so much.